Hi, I'm Gemma Dooley, the Chief Investment Officer of Club Plus Super, and I'm here at North's Camaret. Welcome to our investment update for the end of the financial year. And wow, what a year it's been. To say we've had a bit of everything in the last 12 months is an understatement. Let's look at the year in two halves. The first half, the period from July 2019 into early this year, saw strong returns from global share markets and other growth assets, spurred on by central banks cutting rates to help avoid a recession and a break in trade tensions between the US and China. US shares were up over 10%, while in Australia, devastating drought and bushfires weighed on the markets in December, and our share market delivered a more subdued return of 3.3% for the 6-month period. In this environment, our MySuper option was up 3.5% for the first half of the financial year, a strong half-year result. The second half of the year started well for global markets, with some reaching all-time highs in February. But this started to unravel when the coronavirus that started as a problem in China in January spread quickly around the world and the death toll rose dramatically. The widespread lockdown of countries put in place to try and contain the pandemic has had huge social and economic impacts. Share markets initially reacted harshly, some plunging as much as 35% between the 20th of February and the 23rd of March, dragging down commodity prices and the Australian dollar with it. Also during this period, the RBA cut the cash rate to 0.25%. The swift intervention of governments around the world, in the form of huge stimulus packages, together with the decline in new cases, the easing of lockdown restrictions and a rebound in economic data over the next few months, substantially lifted investor optimism and share markets rallied significantly. From the March lows, global shares rose 40%, domestic shares rose 35%, and commodity prices and the Australian dollar also rebounded. But this was not enough to claw back the losses made in March. As a result, for the second half of the financial year, US shares were down 3% and the Australian share market lost 10%. In this environment, our MySuper option was down 4.4% for this period, diversification protecting it from the extremes of the market crash. As you can see, the year was made up of two very different halves. Over the full year, the MySuper option had a small negative return of -1%. While we never like to deliver a negative return to members, we think this is a solid result given the wild ride in markets caused by the impacts of the unprecedented global pandemic that we're all living through. And we delivered this in a period when we gave almost $80 million to members without delay in the early release of Super Scheme. To put this return into perspective, during the global financial crisis in 2008 and 2009, the financial year return for the median MySuper option was -12%. Now that was pretty ugly. Remember, super is a long-term investment, so financial year returns by themselves are fairly irrelevant in the big picture. Importantly, the long-term returns of our MySuper option remain strong, with a 10-year period ending the financial year returning 7.2% per annum. Interestingly, compounding at this rate over 10 years would have seen a member's super balance double over this period, and this doesn't include any contributions along the way. So what can we learn from the last financial year? There are 7 things that stand out for me. Global pandemics are a real thing. I don't think any of us could have imagined what we've been through this last year. It really feels like we're in a movie. Governments can dig deep when they need to. Homeschooling kids is difficult. A well-diversified portfolio can protect you from wild market swings. Don't jump at shadows. When it comes to investing, ignore the headlines and all the short-term noise, and remember that super is a long-term investment. Again, history has shown us that markets rebound from seemingly dire events that rattle investor confidence. However, there could be further market corrections ahead. And finally, don't inject disinfectant to protect yourself from COVID, even if that's what Trump told us to do. Where to from here? No one really knows how long the pandemic will take to get under control around the world, or what the true lasting impact on the global economy will be. On the one hand, there have been encouraging developments in containing the virus and in creating a vaccine. However, in some countries, the number of new cases continues to rise, and in others, new outbreaks are occurring, like here in New South Wales and Victoria. While uncertainty continues around the pandemic, market volatility is likely to remain elevated. We are also yet to see the full collateral damage it has caused in terms of corporate failures, high unemployment, and weak growth, and these are expected to weigh on the economy in the months and years ahead. And finally, looming in the background are rising tensions between the US and China, as well as social unrest and a rapidly approaching US election in November. The best thing we can do amid all this uncertainty is to continue to actively manage your super on your behalf. We draw on some of the world's best investment managers and our experienced asset consultant to help us do this. Together, we are closely following global developments and making investment decisions based on strong research and a very disciplined investment process. As always, if you have any questions about your super, don't hesitate to contact one of our team. There are things you can do right now to try and bridge the investment impact of COVID on your super balance. In the meantime, I hope you're coping okay living through a global pandemic. This will be quite a story to reminisce about in the years to come and to tell the next generation. Thank you and stay safe.